Last Thursday, we talked about something major. Mortgage rates had dipped into the fives for the first time since September 2022. It created the biggest affordability improvement buyers have seen in years. Since that update, something huge happened: a military strike involving Iran, oil prices spiking, and global markets reacting almost overnight. Today, we're going to break down what changed in the last 7 days. I'm Cathy Sabater, and this is your Thursday market update for March 5th. Rates and global shock. Military strikes involving Iran triggered energy market shocks and global uncertainty. The Strait of Hormuz, where about 20% of the world's oil supply passes, has been disrupted. Oil prices immediately jump. Here is why it matters for your mortgage. Energy inflation pushes up bond yields higher. When bond yields go up, mortgage rates go up slightly in the short term. That is exactly what we saw, rates briefly going back up to about 6.08% today. Remember, the bigger story here is the short term market volatility, not the long term reversal. The housing market just flipped. While the global market is chaotic, something very important is happening inside the housing market itself. Across the US, there are now about 44% more home sellers than buyers. That's roughly 600,000 more sellers than buyers nationwide. For the first time in years, many markets are beginning to tilt towards buyers. Now, this does not mean home prices are crashing. It does mean buyers have more negotiating power. Homes are sitting longer and price reductions are increasing. What does this mean for buyers? This is actually a very interesting moment. Now have two forces working in your favor: lower overall mortgage rates than we've seen in the last couple of years and more inventory on the market. That combination creates negotiation opportunities we haven't seen in years. For sellers, the strategy has changed slightly. The market is no longer listed and they will come. Now you have to make sure that you price your home correctly. It has to be market properly, and move in ready are still selling fast. Pricing aggressively above the market is causing some homes to sit. How about the sell to buy opportunity? One of the biggest opportunities right now is for move up homeowners or those who are downsizing, people who need to sell their current home and buy another home. Because when rates are down from their previous peaks, your power purchase increases faster than your home price may adjust. That creates opportunities to upgrade homes, move neighborhoods, or reposition long term real estate wealth. For homeowners, in regards to refinancing, as rates move closer to the 5% range again, we're seeing renewed interest in refinancing. Refinancing is then being utilized for rate and term to lower the payment, also cash out refinancing, and that cash is being used to pay off high interest debt, home renovations, or investment property down payments. So here is the big picture mortgage rates recently are showing us. The housing market is shifting towards buyers because we have more inventory available. Global events like the Iran conflict and oil prices are adding short term volatility. Now, for buyers and sellers and homeowners planning strategically, this may actually be one of the most flexible real estate markets we've seen in a few years. I'm Cathy Sabater, mortgage broker and proud veteran. If you want help running the numbers for buying, selling, or refinance, comment the word strategy below or message me directly, because The smartest real estate decisions are based on math, not headlines. Enjoy your day.